Hi guys, so review for today is going to be both the weekly outlook and review. Didn't do a review on Friday, life happens. Just that you did that one on your own, which is fine. So the calendar for this week, all USD, because is this the right one? I don't think this is the right one. Yeah, it's weird. I'm like, wait a minute. This is the right one. So today's over. High impact news tomorrow. Wednesday is dry. Thursday, Friday looks aggressive, especially Friday, which says Wednesday is very likely to be a sentiment-driven day, pulling on whatever decision is made by this. The core retail sales is going to be very important, very, very important. And then Friday is going to be the debt ceiling discussion. So make everything full circle. I'll just check CME's website as well. See what the current expectations are as it relates to interest rate data. Well, it's taking a while, isn't it? Next FOMC is 29 days away. Let me refresh because I need that chart. Let's see, bam, bam, bam. Before I check there, just look at right here. No change, no rate hike. So most persons are looking for the no change in the current interest rate. So it's likely to stay the same at 5, I believe. Yeah, could always check. So 5 or another 25 basis point increase is what most persons are expecting, which is fine. While 5 basis points isn't something dramatic, if we keep increasing by small increments, eventually we're going to get to a point where DXY is going to be strong. All right, so I'm looking for something this week going into the next 3 weeks that could cause a rally for DXY towards 105 and then crash. Yeah, so we'll see. So pop back to NASDAQ, and there are 2 levels currently highlighted on my chart. The objective from last week and the 13,500 mid-figure level that I'm expecting to be significant in contributing to where the high of this week or the high of Tuesday is likely to be. I don't know what Wednesday is going to do, but I think it's going to try to either run Tuesday's high and then tank or stay inside the range. But for now, we don't know, so we wait. So with that being said, I have my order flow bullish. I have my drawn liquidity met. We're not closing above here. We already got the OLR. So I'm looking for a little bit more dig into here. H1. Oh, let me add the start of the delivery. Bam, bam. Here, that's the start of the delivery. We expanded. Range high. There. We were trading inside this range. And we left. So for this week, I'm going to be looking at price drawing towards here and then price being sensitive to that. So this is what, Thursday? Thursday's open. Some kind of sensitivity there. And I'm not using this because it's so far away. I'm using the high of the range that was created here. So yeah. 1H. Now let's refine on the hourly chart. This level overlaps with 4 a.m. from previous week, which is somewhere right here. So I'm just going to refine that to 4 a.m. because old highs and old lows don't really carry that much significance for me. So let's assume that this is the delivery we have, and this is the start of the delivery. That would mean we're efficient Inside here, we displaced, we rebalanced. Now we're trading towards that high. And then 13,500. Now today was Monday, and we expanded higher, starting at 4 a.m. That caused an expansion higher. Since we're still inside an efficiently traded range, all of this, don't really expect any imbalance that's formed in this run-up to be filled. Any FEG formed here, like this one, don't expect them to be filled. They can be traded too if it overlaps with like a lower time frame low, but don't expect these FEGs or any FEGs formed right here to be filled in completely. If they are filled in completely, anticipate lower prices. So nice and easy going into the week. Any FEGs that get formed between here, trading up to 13,500, we don't want to see them get filled in. If they get filled in, maybe after we tag 13,500, don't anticipate any push above 13,500. Anticipate deep run back into 13,000. Cool. So from a liquidity standpoint, I'm looking for higher prices. The liquidity at the moment to me is resting above this high right here at 13,450, thereabout. Looking for higher prices. So that's the outlook for the week. Trade up to 13 between this high and 13,500. Of course, we're going to watch how we close at 13,500. If Tuesday fails to expand above it, or it expands to 13.5 and then rejects, I'm looking for lower prices. On H1, if that happens, I'll be watching the FEGs formed in that leg, and I'll be expecting them to get completely filled in. Body closure, not wick closure, body closure below them. So Friday, I'm expecting a large down day. I would really like a large down day for Friday, but it's going to be dependent on what the discussion is. So I'm not holding that as a firm bias, but more of an anticipation, which means if I see it, I trade it. If I don't see it, I trade what I see. Realistic trading. Now let's jump into M5. Wrap up the ONS review for today. I'll keep this level on and I'll show you what I missed today and how I bounce back. Overnight session, 8 o'clock, right here. This range, I'm bullish. Order flow is bullish. I'm expecting that run up, black line and above. So I'm coming into overnight session with a bullish bias. I wanted to buy. Now this is a down candle below overnight session low. I'll put a line there at the low. That a down candle closed into and we took its high. So why didn't I buy here? Because of the H1. On H1, I'm looking at this push right here. We took sell side, we traded up, FEG right here, filled in, not with bodies, but we did fill it in. So I'm looking for some amount of retracement and then higher. This, I don't expect to be filled in. I didn't expect this FEG to be filled in. So because of that, I was paying attention to price dipping inside FEG and then moving. 8 o'clock, that hourly candle dipped into that and created the low of overnight session. So I no longer had this on my mind because at 8 o'clock, we were already very much below it. So logically, this comes on my mind. Now, when I'm looking at this, I'm not looking at this from the standpoint that, hey, it's a fair value gap. Let me go trade it. I'm looking at it as, let's call it a key level, in particular this low. So I'm watching that low to see if we can get any kind of accumulation right there. So if you're in the Telegram, when I said no, it's when we traded to that. That's when I wanted that M5 down candles high to be traded through, but it didn't. But we'll see that on a lower time frame. What I missed was this. See how the bodies right here are resting? This is rejection block. This is very much identifying a rejection block structure to me. So because I missed that, I didn't anticipate that the M5 down candle that was formed here could be traded through. So watch when we go to M5. When I said no, it was right here. I'm waiting for CSD right here, which is what I said. It didn't happen. When this happened, since this is the candle that created the low at the key level I was watching, I interpreted this candle as my order block. Now, order flow here is bearish, short-term retracement. This is running on sell side. Down to here, all of this is running on sell side. Whenever you're bullish and you get a sell side run, you need that CSD before you go long, and that's why I was waiting for that right here. An order block created before change in the state of delivery or a market structure shift is very likely to get raided. And that's why you don't buy a down candle just because it's a down candle. It got raided. That candle raiding the order block, or the order block candidate rather, traded into the rejection block and reject like magic. Wow, right? We traded above right here, validating the order block. So now I'm interested in buying the order block. I didn't buy here because I didn't see it. When this happened, this validates for me what I want to see. And that's when I said I'm going to buy. I'm going to be a breakout trader today and buy above the highs. Didn't really care about the order block. My plan was once we traded down inside here again, even if we didn't trade into this order block, I would buy. Luckily, my first entry was inside here mechanically, and the second one was inside this, and I played that to Friday's overnight session high. Not high. This candle 420, 13,420 was my take profit. So yeah, the setup played out like that. We traded down into that. We got that, and then we moved on. No big deal. Now price is just sitting at the old daily low, which was the one we're looking at for last week's objective right now. And I don't know what's happening here. So we're just going to wait for tomorrow to see what overnight session is like. But I'm expecting them to push this guy higher. So that's pretty much it for today's call. What I want to point out again is make sure you're journaling these deliveries. Make sure every time overnight sessions forms, you're screenshotting an M5 and just creating those drawings for yourself. Label them. What do we do after 8 o'clock? Identify it. Learn how to anticipate it. I know most persons can already anticipate when the down candle forms right here at overnight sessions low, and we CSD, which means we trade above the down candle that takes the liquidity. I get a lot of questions about CSD. The down candle that takes the liquidity becomes an order block candidate. It's a candidate. We don't know if it's an order block until we see price trading through its high. When price trades through the high of that candle, I'm interested in buying. So why didn't I buy this one? Because I have a rule. My rule is whenever I'm bullish, I want to see two things: sell side liquidity run or discount array. There was a whole lot of sell side on the H1, which was this black line here. So if I buy this order block right here, this one, where do I put my stop? Below this low, knowing that this is liquidity, and that's madness. And that's why this guy and this guy made this a very nice trade, or a trade idea I'd be willing to put risk on. So if I bought this and it was a loss, no emotions, no overthinking, because this is a rules-based trade. So yeah, pretty sure they kind of reclaimed it somewhere here after they traded above it. Really quick, relevant, but yeah. So yeah, keep that in mind. If I could, and I had the, how do you do this again? Let's see. Wait, let me try something. Let me try something. Annotate box white. If I could, I would do this. So from right here. Oh, too far. 1 sec. I'll just start here and then use another box to cover anything I don't want. So I'm going to cover that and identify the high of that candle. When the high of that candle is threaded through here, just imagine mentally that none of this took place. If none of that madness took place, then the delivery would look like overnight session high, yeah, I'm drawing this old school. Low gets taken, low gets traded above, come back down, beautiful. That delivery is worth noting. But yeah, hopefully this helps. Left something there for you to study. And see you tomorrow. Totals, thanks for the support, by the way. Yeah.